Charges for security and monitoring of advances. Banks provide a lot of financial and non-financial services, and for that they charge some amount as security and monitoring charges. The term bank charges cover all the charges which are charged by the bank, such as charges for the provision of an account, charges for specific transactions, interest and all other collateral securities which are collected by banks for security purposes. Security for bank advance has no doubt been reduced to secondary importance in the present context, particularly for priority sector advances. But it is still very important to influence the decision of banks in conventional advances. Reserve Bank of India has also stipulated certain quantitative restrictions on the bank's power to grant clean advances. Banks have prescribed their own formats for documentation for various types of advances, and the borrowers in almost all the cases have to execute those documents without any choice. In this lesson, we learn issues pertaining to charges for security and monitoring of advances. It follows from the previous slide that after studying this lesson, you should be able to understand different types of charges, explain the importance of charges, describe the different rules regarding the charges. The securities may be either primary or collateral. The securities acceptable to banks must have certain basic characteristics as shown on the screen. A security will be considered good and will be acceptable to the bank only if its value can be ascertained with a definite degree of correctness. A good security must have a ready market and a stable value over a long period. An asset can be accepted as security by the bank only when the title over that asset can be ascertained. Furthermore, the title should be easily transferable. In case loan or advances to Muslims offering their property as primary or collateral security, it should be ensured before accepting property as security that such property has not been alienated under the Muslim law like Waqful Ulad and Hakar Meher in favor of their wives or for the benefit of their heirs, since it will jeopardize the interest of the banker as lender. In addition to them, the borrowers should be asked to furnish income tax clearance certificate or clearance from local authorities. Apart from these, there are few other characteristics such as controllability of an asset as a security and securities having a yield which will enhance their value, etc., which are critically analyzed by the bank while accepting any security. Charging of security means making such security available to the bank and involves certain formalities. Charging should be legal and perfect so that it is possible to realize the security if such a need arises. There are 6 different modes of charging a security, namely pledge, hypothecation, assignment, mortgage, lien, and set-off. Pledge is bailment of goods by the debtor to the creditor with an intention to create a charge thereon as security for the debt. In pledge, the ownership of the goods remain with the borrower, whereas physical control over these goods will be exercised by the bank. The borrower has a right to get the goods returned to him after payment of debt created here against. A charge on a property for a debt where neither ownership nor possession is passed on to the creditor is known as hypothecation charge. Hypothecation agreements obtained by the banks generally have a clause under which hypothecation can be converted into a pledge at a later date. This form of charge is ideal from the point of view of the borrower, as he is always in control of goods offered as security to the bank. In case of default by the borrower, the bank may take possession of goods and convert it to pledge only with the consent of the borrower. Assignment means transfer of a right, property, or debt by one person to another person. This form of charge is generally adopted for charging of book debts, monies due to the from government supply bills and life insurance policies, etc. Mortgage is a mode of charge associated with immovable property. Section 58 of Transfer of Property Act 1882 defines mortgage as a transfer of an interest in a specific immovable property for the purpose of securing an existing or future debt. Lien means the right of the creditor to retain the goods or securities of the debtor, which are in his possession until the debt due from the debtor is paid. It does not require any specific agreement to support his right. Set-off is the right of combining of accounts between a debtor and a creditor so as to arrive at a net balance payable to one or the other. Set-off in relation to bank means his right to apply the credit balance in customer's account towards liquidation of debit balance in another account of the customer, provided both the accounts are maintained by him in the same capacity. The right of set-off can be applied by the bank only if certain conditions are met, like the liability of the borrowers is for a sum which is certain, the repayment of debt is due, both the accounts are held by the customer in the same capacity. The right of set-off should, however, not be exercised arbitrarily, and a notice for combining the accounts must invariably be served by the bank on the customer. Now let us check if we have understood the various concepts discussed in this lesson clearly. Lien is bailment of goods by the debtor to the creditor with an intention to create charge thereon as security for the debt. Right or wrong? Wrong. That is a pledge. Mortgage is a mode of charge associated with immovable property. Right or wrong? Right. Pledge means transfer of a right, property or debt by one person to another person. Right or wrong? Wrong. This is an assignment. Before we end, let us briefly revise what we have studied till so far. Banks provide services to its customers, and for that they charge some amount as service charges or monitoring charges. Bank charges can be according to the service of the bank. Security is obtained by the bank as an additional cover against default by the borrower in repayment of bank's dues. Charging of security means making such security available to the bank and involves certain formalities. The different types of securities can be pledge, mortgage, lien, etc. Bank charges some extra amount for some additional services in the bank. Specific charges for issue of checkbooks, additional or duplicate statement of accounts, duplicate passbook, copies of paid checks, folio charges, debit card, ATM card, verification of signature, return of check for insufficient balance, change in mandate or style of account, etc. will be charged by the banks.